Imagine a world where the lights go out, not because the power plant failed, but because a single narrow stretch of water thousands of miles away was suddenly slammed shut. While most people are staring at their gas gauges, worrying about the price of a gallon of fuel, they are completely missing a silent earthquake happening in the precious metals market that could redefine wealth in 2026. A massive refining shock is building up right now in the Strait of Hormuz, and it is about to change the price of silver forever in a way that absolutely no one in the mainstream media is talking about. This isn't just a news update, it is a breakdown of the very math that keeps our modern high-tech world running. Welcome to Maritime, your home for the data-driven truth that the big banks and institutional players hope you never discover until it is far too late to act. If you want to protect your hard-earned wealth and stay ahead of these global shifts, please make sure to hit that like button right now and subscribe to Maritime with all notifications turned on. By joining our community early in this video, you are making sure that you are the first to know when the physical silver market hits the point of no return. We are diving deep today into the mechanics of a supply chain collapse. So let's get right into why this specific naval choke point is the secret trigger for a silver explosion. The Strait of Hormuz is widely known as the world's most important oil and gas artery. But what people forget is that it is also the hidden heart of the global refining industry. Silver isn't just pulled out of the ground as a finished coin. It has to be cooked, separated, and purified in massive industrial facilities that require enormous amounts of constant energy. When the geopolitical temperature in the Middle East boils over, as it has this March, the cost of that energy doesn't just go up slightly, it skyrockets. We are seeing a situation where shipping insurance for tankers is hitting record highs, and cargo ships are being forced to divert thousands of miles around the Cape of Good Hope. This means the raw silver ore sitting in South America or Mexico is taking twice as long to reach the critical refineries in Europe and Asia, and the energy needed to melt that ore is becoming more expensive by the minute. This is the birth of the refining shock. It is a massive bottleneck where the supply of finished, pure silver bars is being cut off at the source, even while the demand from the AI and solar industries is reaching an all-time high. The real danger that we have uncovered here at Maritime is that the world is currently operating on a dangerous just-in-time inventory model. The big bullion banks and silver dealers don't actually have months of supply sitting in back rooms anymore. They rely on a constant, daily flow of newly refined metal to meet their orders. If the Strait of Hormuz stays tense for even another few days, that flow turns into a trickle. Think of it like a massive sink with a very tiny drain. The demand is the water pouring in at full blast, and the refining capacity is that tiny drain. If that drain gets even partially clogged by high energy costs and shipping delays, the sink overflows, and the price of physical silver completely separates from the paper price you see on your phone. This is exactly why you are seeing such a huge gap between what the news says silver is worth and what you actually have to pay at a local coin shop. The physical reality is detaching from the digital illusion, and once that gap opens, it rarely closes without a violent move upward. As we look at the data for this week, the numbers are truly staggering for any investor to ignore. The industrial sector alone is projected to consume more silver this year than the entire world produced just a few years ago. From the silver paste used in massive solar farms to the microscopic components in the newest AI chips, silver is the indispensable metal of the modern era. But that future cannot happen without energy, and that energy is currently held hostage by geography. Here at Maritime, we believe that the true floor for silver has moved permanently. We are no longer in an era of cheap production or easy logistics. When a refinery has to pay triple for its natural gas because of a blockade or a supply interruption, they don't just eat that cost out of the kindness of their hearts, they pass it on to the buyer. This creates a permanent upward pressure on the price of every single ounce of silver ever mined. It's not just about a temporary spike, it is a fundamental repricing of what it actually costs to bring metal to the market in a fractured world. If you're watching this, you probably already realize that the paper market is a game played by banks to keep prices low so they can accumulate more metal for themselves. But a refining shock is a total game changer because banks cannot print physical silver out of thin air. They cannot digitally refine or when the power is expensive and the ships aren't moving. You either have the physical metal in your hand or you don't. When the industrial giants realize that the supply chain is breaking, they stop caring about the screen price. They start bidding against each other in private to secure whatever physical stock is left. This is exactly what happened during historical supply shocks in the past, but this time, it is happening on a global scale with a metal that is already in a massive structural deficit. The Strait of Hormuz is simply the match that has lit the fuse on a mountain of very dry tinder. At Macromint, our goal is to show you exactly where that fire is spreading next, so you can position your family and your portfolio accordingly before the exit door slams shut. The psychology of this move is just as important as the cold, hard math. Fear is a powerful motivator, but industrial necessity is even stronger. A company like Tesla or a major solar manufacturer cannot simply stop their assembly lines because silver has become expensive. They will pay whatever they have to pay to keep the machines moving and the contracts fulfilled. This creates what we call a price-insensitive buyer. When you have a market filled with buyers who don't care about the price and a supply that is physically blocked by war and energy costs, the result is almost always a vertical move on the charts. We are entering a period where the daily fluctuations of a few cents or even a few dollars won't matter anymore. What will matter is whether or not you have physical possession of the asset. Before the global refining capacity hits a total standstill, this is the conversation that isn't happening on the mainstream financial news networks. And it's why independent research and community-driven data are so critical right now. As we look toward the end of the month, the pressure on the COMEX is only going to intensify. We are seeing more and more traders standing for delivery, which means they are asking for their metal instead of taking a cash settlement. This is the ultimate nightmare for the shorts. When you combine a delivery crunch with a refining shock in the Middle East, you get a situation where the physical market can literally break. We have seen glimpses of this in the past, but never with the global stakes we have today. The silver market is small enough that a few $1 billion of panic buying can move the needle in a way that most people aren't prepared for. Macromint is committed to tracking these volt movements every single day, because these are the early warning signs of the big move. If you are waiting for the mainstream media to tell you it's time to buy, you are already too late. You have to see the shock coming before the shelves are empty and the premiums are 50% above spot. The connection between the Strait of Hormuz and your silver coins might seem distant at first, but in a globalized world, everything is connected. The energy used to transport that metal, the chemicals used to refine it, and the security needed to protect it all depend on a stable geopolitical environment. When that stability disappears, the value of the hard asset itself becomes the only thing that matters. This is why we see countries like China and India hoarding physical metal at record rates while the West sleeps. They understand the refining shock. They understand that when the jugular vein of the global economy is squeezed, the heart of the financial system skips a beat. Here at Macromint, we want to make sure you are on the right side of that trade. We aren't here to sell you fear. We are here to provide the logic and the data that allows you to act with confidence while everyone else is panicking. As we wrap up this deep dive into the hidden refining shock, I want to emphasize that the window of opportunity for what we used to call cheap silver is closing faster than most people can imagine. The dynamics in the Middle East are shifting by the hour, and each shift adds more pressure to an already broken and fragile system. If you found this perspective valuable and it helped you see the silver market through a different lens, please share this video with your friends, your family, or anyone you know who is worried about the future of their savings. Sharing this information is how we fight back against the noise and help more people become financially sovereign in an uncertain world. Also, I really want to hear your thoughts in the comments section below. Do you think the US military will intervene to keep the strait open, or are we looking at a long-term shift in how global commodities are priced based on energy costs? Your comments help the Macromint channel grow and allow us to keep digging for the facts that actually matter for your bottom line. Thank you so much for spending your valuable time with us today. Stay focused on the data, watch the energy markets very closely, and I will see you in the next analysis.